The market is falling, it's a bear market, the sky is falling. There are tons of dead stocks out there, 80% to the downside, 60% to the downside, some 90%. You don't want to get caught buying something that is not going to recover. So in this video, we're going to talk about just that. Why are stocks going down and how do you avoid that pitfall of catching a falling knife? All major publications are asking this simple question: why are we down? The simple answer: you have the inflationary environment. When rates are going up to combat inflation, the cost of borrowing is rising for these companies, and that means if you're a growth company, it is going to be more expensive for you to pay through investing in the business for that future growth. So now that we've established that you're in that challenging raising rate environment, how do you not get stung? Two things only to avoid that big mistake. So first method is, has the business changed fundamentally? It is simply the basic qualities of the company, and we're talking about qualitative here and quantitative, that are gonna give it a reason for it to increase their earnings. An example of this might be Netflix. Increased competition in streaming. That's going to be a negative for them. However, getting into the ad-based business where they can get some extra revenue, that's a fundamental shift in the change. Meta is trying to go into the metaverse, obviously. That's a fundamental shift which could lead to future earnings. So you're looking for those kinds of shifts that give a reason for the stock to have that next leg up. The second thing you're going to look for are the basic technical levels. We're talking about support and resistance. You do not want to buy something which is constantly making lower lows and lower highs. It's a very simple concept. You do not need to time the bottom. You want to make sure that there is an uptrend worth buying into, that you are not still a falling sword. So look up those basics about support and resistance and understand it's better to get in once the trend is reversed than try to guess when it is going to happen. The other thing you want to consider with technicals are 52-week highs, 52-week lows. If you're still making those to the downside, that can be a little bit of a problem. You want to avoid that like it's the plague. Do not only look at these short-term 1-minute chart, 15-minute charts. Look at your dailies, look at your monthlies. That's your bread and butter when looking for that market bottom. So I'm going to leave you with one little bonus here. What is a dead stock? Let's talk about a pandemic darling, Zoom. That's a dead stock. COVID is over. It was the pandemic darling. Look at what's going on in the daily chart. You have this crazy bottom and you have a reason for it to have happened. Contrast that with Netflix. We talked about the ad revenue and the new business that they're getting into. You've had that fall. Now you're making some higher lows. That is a good thing to look forward to. That's when you know you're not buying a falling knife. A fundamental shift has happened and you're seeing the technicals follow it to the upside. So to summarize here, we talked about why the market's falling, raising rate environment, challenged by inflation, also why you want to avoid getting into those falling knife stocks too early. Look at the big picture analysis there. The fundamentals of the company, have they shifted or not? If they have, that's a good reason to get in. Do not ignore those technicals. You want some higher highs to be made. Zoom out. Look to see big support and resistance. Support holding, resistance breaking. As always, grab our daily watch list to see what is moving and how you can take advantage of it in the markets, and check us out 8:30 every single morning at TraderTV.Live.